Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be giving the twin webinar, the monthly twin webinar, tracking the forex market together. So the part 1 is between 9 and 9:45 GMT on January 16th, and part 2 will be between 15 and 15:45 GMT. Good day to one and all. Then I'll explain my tracking technique. It is a simple market tracking technique, and if you effectively use it without any distractions, you will be able to consistently make money from that of the market. So what are the tools we use for this particular tracking? First, we understand the market timings followed by that of the players. So the players, depending upon the natural opening and the closing of the banks in different regions of the world, they have identified 3 different sessions and also the gap time between the sessions. So Japanese session is from 0030 to 7:30 GMT. Then European session is from 8 to 14 GMT. And US session is 14:30 to 21:30 GMT. In between 30 minutes gap between the Japanese and the European is the gap time before the start of the European session. And similarly, the 14 to 14:30 GMT is the gap time before the start of the US session in between European and US session. Then you come across a long gap of about 4 hours, and that is for the next day opening, again the Japanese session. So that is how the gap times are being formed, and these gap times are being used by the other players when the bank official transactions are not held. They try to use it for making false moves in the market. Now, knowing about that of the timings, now we are in this particular time zone or in this particular trading zone, European session. It starts by 8 GMT and ends by 14 GMT. Now, if you see the live market quote page, you come across the bid and the ask of the respective currencies, the 4 majors, Euro, Yen, GBP and CHF, and the 2 commodity pairs, Canadian dollar and Australian dollar. Bid and the ask are there, besides high and low are also given. Then you find the net change from that of the previous day close and also the timings. So now we are at 9:04 GMT. So 8 GMT the European session starts, then 1 hour has passed from that of the start of the European session. So what we do next? Then we look into that of the live market quote page. So in the live market quote page, if you see around 3:30 GMT, they set the initial high and the low. They set the initial high and the low on a daily basis. If we note down in the 4 majors and 2 commodity pairs, then relate those levels, the initial lows and the highs, to that of the market during the course of the day. You will be able to understand what sort of moves they are trying to do it. So the net change is nothing but that of the previous day close, how much of drop or the gain has happened in the market. So now Euro is 37 pips negative net change. That is why it is shown in red. That means from that of yesterday US session close, it has dropped about 37 pips. USD Yen, from that of yesterday close, it has dropped about 91 pips. So now you are able to see, relating to that of the previous day, how the respective currencies are performing today. And if you see, excepting Canadian dollar, all the other currencies are showing negative net change. So it is a contrarian move, because when Euro is making negative net change, it is a USD gaining move. Euro has weakened. Whereas USD Yen, when it has dropped about 90 pips, it is the USD weakening move, because Yen has become stronger when it is a denominator currency. So it has become stronger than that of USD. That is why the ratio has come down. So when Euro is showing USD gaining move and USD Yen is showing USD weakening move, then it is a contrary, or it is a contrarian move. They are making it in order to drop Euro Yen further down. Similarly, Euro is showing negative net change and CHF is showing negative net change, which is yet another contrarian move, and that is mainly to drop Euro CHF. So they have just made the drop in the case of Euro Yen about 154 pips, and in the case of Euro CHF about 66 pips. So when they are doing this sort of contrarian move, understand that they are handling the crosses. When they are handling the crosses, when you try to take the positions in majors, then we may not be able to see the profit immediately. So we need to understand that what sort of moves they are doing it. In the case of Canadian dollar and Australian dollar, they are making the USD gaining move. USD CAD is showing positive net change and Australian dollar is showing negative net change. But the rest of the currencies here, the numerator currency, Euro and GBP, are showing negative net change, and also USDN and USD-CHF are showing negative net change. So they are busy handling the crosses, especially the crosses of Euro, crosses of Yen, crosses of GBP, crosses of CHF. So in such a scenario, then we have to avoid taking positions in the case of the majors. But still, we can read the market and try to find out what sort of moves they are doing it, and then fine-tune our entry with the help of the market trading technique. Thereby, we will be able to get the assured profit. So when the market is near the low or the high, we try to enter into the market. And when they have breached the low or breached the high and then gone, we watch with a relaxed mind and find out what they intend to do. So always during that of the early and the late sessions, we handle we enter and exit in the case of the majors, and during the mid sessions we can focus on the crosses. Now, with regard to the initial lows and the highs set for today, I just already noted down the initial lows and the highs around 3:30 GMT. Today is 16th Jan. So we will compare it with it of the current market levels. Now it is 9 GMT. And around 3:30 GMT, I noted down, Euro formed the initial low of 1.3279, but current low is 1.3262. So they just dropped about 17 pips, but it appears that they are holding it below this low from that of around 5 GMT. Then, now it is 9 GMT. For nearly about 4 hours, beyond 2 hours they are holding. So when they hold below that of the initial low beyond 2 hours, we know that they are doing the intentional move on the downside. But if you look into that of the net changes, they are showing nominal net change in the case of Euro about 37 pips and 59 pips in the case of GBP, and more than 75 pips in the case of USD Yen. The rest of the things are around 20-30 pips. So they are actually going to that of the USD weakening move by dropping USD Yen. But they are also making drop in the case of Euro and GBP mainly to drop the Yen crosses and also drop Euro CHF. So when they are handling the crosses of this nature, they are trying to make the intentional move on the downside, but not breaching the low every 30 minutes. So that is what we need to understand. And we are on the midweek. 16th of January is Wednesday, midweek. So midweek they are trying to accumulate the positions before exiting out of the positions during weekend on Friday. So when they are dropped, we know very well that they drop the market and buy and then gain the levels to book profit on Friday. So this current drop is to accumulate the buy positions. So below that of the psychological level 1.33, when they are dropped, those who have taken around 1.34, 1.33, the buy positions become nervous. If they fail to use hedging to limit the risk, then they will try to liquidate the long positions, and the players happily buy that and later on take up. So when they are making a contrarian move of this nature, that is Euro negative net change and USDN negative net change, CHF negative net change, they are not expected to make a very big drop. They only make the double edge effect. So 35 pips in the case of euro and 94 pips in the case of USD yen. As a result, 150 pips in the case of euro yen. So a cumulative effect is seen. That is why they have just made the drop of 155 pips. And in the case of GBPN, they had dropped about 193 pips. Whereas if you see in the case of the majors, they are not making that much drop. So you know that in the case of USD yen, they have been making one-sided rise from that of 80, 81, 82, 83, 84, 85, 86, 87 up to 89. 89, 85, they went up to almost close to 90. From there they made that drop. Now, so those who had gone short during the rise, they would have just liquidated when they have seen the market is going above 89 and turned long in order to earn back the lost money. So when all the traders turn long, the players are not willing to give profit for them. Instead, they make a drop of this nature, induce them to liquidate the long positions out of fear, then continue to rise the market. So actually they are buying here, USD yen, they are buying by holding closer to low and breach the low and just hold it, and thereby the long holders will liquidate. At a range they buy from 88, 10, 88, 20 up to that of 88, 80, they are just buying. They may dip 1 or 2 pips also, doesn't matter. And in order to create the fear and also to hit the stops, they try to make this sort of moves. And then subsequently you will find tomorrow and day after they are just reversing. They are going to reverse USD yen on the upside. So then we will be able to understand that drop is their buy strategy and the rise is their profit booking strategy. On Monday when they showed 1.34, everybody become bullish. And in euro and also in GBP around 1.6162, everybody become bullish. And they said that it can go up and things like that. But which has induced the traders to take long positions. The players know that the traders are net long, so they just made the drop now to earn their money on the downside. Then when the traders liquidate all the long positions and turn short, thinking that the market is under the grip of bears, but actually the same players become bullish and bearish alternatively. But we will be informed that the bears are under control of the market, so that is why the market is making a drop. So when the bears are selling, but somebody is buying, the same people are buying here, but they give a different story to us for us to believe. And so it is something like telling a moth as a butterfly and the butterfly as a moth. And so we may think that both look alike, but they are different. In the same way, they just perceive the market in a very colorful way and try to take the positions when the market is making a drop, but create the fear for us and give that impression to us that GBP is non-performing currency and only euro has got a scope to go up or come down, whereas GBP is going to be flat. That is how they create all the impressions, and that is mainly to rise euro GBP to that of the 82-83 area, 0.83 area. Later on you will find that they will drop it to 79-78 area and with a different story again. So this is how you find that the market is being perceived by that of the traders differently from that of what the players perceive. Then in the case of yen, so 88.06 was the initial low and they just gone below to 87.80. Hardly anything, about 20-25 pips. But it appears as if yen is going to drop in a very big way. What they had done it? They set the initial high, from there they made the drop, but they are all positive net change, and subsequently they made the drop below that of the initial low, and which gives the impression to that of the traders that nobody can stop the drop of USD yen. Then everybody will think that okay, USD yen is going to undergo the big reversal on the downside and sell, and later on you'll find that they are taking it again on the upside as a one-sided move. Then in the case of CHF, the initial low was 93.04 and they had dropped about 10 to 11 pips. 92.91 has become the new low and they are holding it below 93.04. The high is also breached by 5 pips. They had done a brief upward stop and followed by that of the downward stop and keeping it in a range, and which gives the impression to that of the traders that USD CHF is not willing to rise. And actually we see that they are making a contrarian move to make a drop in the case of Euro CHF. And when you refer to that of Euro CHF, it was trading around 1.20 level, 2050, 2100 for a prolonged period. And people thought that it is very easy to earn 10 pips, 15 pips, and it is a very safest currency wherein you can do sell and buy and sell for 10 pips, scalping and things like that. And when they had done the prolonged consolidation, they had taken it around 250 to 300 pips, 1.23 area, they had taken it. And 53 pips down, and it went up to 1.24, and they are expected to take it to 1.30 area, Euro CHF. In the same way, when Euro is rising, they are not expected to drop USD CHF. As a result, Euro CHF will go, and people might say that the Swiss bank is trying to intervene, SNB is trying to intervene, so many stories might be given, but ultimately what they intend to do, we need to read it. Only then we will be able to capitalize the market. There's no point in just waiting for such information to come out and then subsequently say that, okay, yeah, there was an intervention and things like that. What is the use? But we need to make profit out of that. Such moves we should be able to read. For that we need to read that type of moves, what they are doing it in the market. Then, so in the case of Euro, they breached the low, initial low, and initial high is 1.3279. They have come closer to that now. So the 1.5 hours from the start of the session up to 9:30 GMT is the early session. They just made the downward move and they have come here. And if they breach 32.79 and stay there for 30 minutes, then there is a scope to go up. Otherwise, they may just go up during the late European session or start of the US session. They are just doing the consolidation at the lower level in order to accumulate the positions, and they wanted to later on rise the market. Then in the case of GBP, also 1.6060 was the initial low, and they came up to 1.6003, about 57 pips, and then now they are holding around 1.6018. So they are expected to go up again slowly in the case of USD GBP. So when you look into that of the negative net changes, Euro formed negative net change of 28 pips, GBP 47 pips among the numerators. So they intend to rise Euro first and later on GBP. Then with regard to the denominator currencies, you find CHF is making lesser negative net change when compared to that of USD Yen. So they are expected to rise USD CHF also along with that of Euro as a contrarian move on the upside after making a brief downward stop. And in the case of Euro CHF, they are expected to make the rise in the case of Euro as well as USD CHF as a contrarian move. So during the US session, you can see all these four currencies showing positive net change. So I'll be giving the part 2 of the webinar. At that time, I'll just recollect what I have said during the European session so that you will be able to understand how the moves of the players are predictable. Then, coming to that of USD CAD, 98.32 is the low. They are not breached it. 98.67 is the high. They have just gone up by 3 pips, 98.70. And simply holding around 98.62 with a 22 pips positive net change. In the case of Australian dollar, it is trading around 1.0540, just below that of the initial low, 1.0557, just about 17 or here about 25 pips. 1.0532 has become the new low, and they come up to 1.0540. Once they come above that of 1.0557, then the further upward move will be seen in the case of Australian dollar. As I explained in the earlier webinars, that Australian dollar is expected to become an underperformer during this particular upward rally, and you will come across Euro and GBP participate in a big way on the upside, and also USD Yen and USD CHF are also expected to gain the levels on the upside. So you will be seeing frequent contrarian move of this nature. Now you see on the downside, they will be making the upside contrarian move as well in order to gain the levels in the case of the respective crosses. So that you need to understand, this is the master plan. No, making contrarian move very frequently. Thereby they will be able to handle all the respective crosses. So that you need to understand, accordingly take positions in the case of crosses. If you blindly see the supports and the resistance and try to take positions in the crosses, then you might be deceived. Understand that they make the contrarian move in order to bring the moves in the case of the crosses. So the contrarian move, what they do it in the majors, you need to understand. Before taking positions, or before taking the directional position, either sell and buy or a buy and sell in the case of the respective crosses. So let me minimize this and coming to the slide. So we note down the initial lows and the highs and just relate the market during the European session, whether they are below that of the initial low or above that of the initial high. Today you come across they are all below that of the initial low, and they are doing an intentional move. Carefully they are just made the downward move in all the majors and trying to accumulate the buy positions. So they are not breaching the new lows very frequently as an intentional move for 2 sessions and the part of the 3rd session, but instead they are simply holding low, creating the nervousness for that of the long holders and accumulating the buy positions. But they induce all the traders to become sellers. Now we need to identify the type of moves. As I explained many times, I will briefly touch upon. After setting the initial lows and the highs, what they do is they just come up to that of the initial high and reverse, or come up to that of the initial low and reverse. That sort of move is referred as the false move. So here, for example, with the help of the live market code page, I'll just explain to you. From the high, they may come up to that of the low, and without breaching the low, they come up and breach the high and stay above, and that is referred as a false move. Then stoppant is the move wherein they just breach the low and come above that of the low in less than 30 minutes. Then it is stoppant. So false move and the stoppants or the moves happen in less than 30 minutes. Then you come across the next move, extended move. They just breach the low or the high, and if they breach the low and stay below there for more than 30 minutes to 2 hours, and then reverse and come above that of the initial low, then that is referred as extended move. And extended move will be always a quick move. So you would have noticed that when they are breaching the initial low, 1.3279, they quickly dropped during start of the European session, and afterwards they stopped cutting the low and started recovering the levels. So this is how that extended move they will try to make. And the intentional move is always a slow move. They just slowly cut pip by pip and drop the market, or slowly rise the market pip by pip. So as a result, you will find the market might appear slow, but they could gain considerable level at the end of the day. So that is what they do it as an intentional move. That means every level selling, they are absorbing it in order to induce them to do the short covering after the rise. So that is the way they try to make the move. So extended move is for 2 hours, and that will be a quick move, and they reverse it. Intentional move is for 2 sessions and the start of the 3rd session. 2 sessions and start of the 3rd session, it will be mandatorily beyond 2 hours. That means once they breach the low and stay below the low for more than 2 hours, then it is an intentional move, and they will try to do that downward move slowly up to the end of the section, and the third session they just make a brief downward stop and start gaining the levels. So now still they are holding below that of the initial low in the case of Euro and GBP. So that means they intend to hold below throughout European session and start of the US session, and then they are expected to make the reversal. So just watch how they are doing it. So during the mid sessions, they make the swings between the low and the high without breaching the high and the low. They just make small swings, and that will be mainly to handle the crosses. See, now they are making small swings without even breaching the low or breaching the high, and not in any currency pair. And that is mainly to make contrarian move and to make small swings in the case of the respective crosses. Now, let me explain to you how the trading strategy plays a vital role irrespective of the market reading. So whatever be the type of market reading, you may use the chart or you may use any of the statistical analysis or the fundamental analysis. Ultimately, the trading strategy is a must. And the most simplest trading strategy is to keep the stop, because we know very well when the market moves in our favor, it will give profit for us. But in the event if the market goes against in a speculative market, then we should be able to limit the risk. And to limit the risk, we are advised to use the stop. And in the process, we are asked to calculate the risk-reward ratio. That is, take a risk of 100 pips in order to gain 300 pips. Fine. As long as we gain 300 pips, then the risk-reward ratio makes sense, because we take risk for 100 pips and aiming to earn 300 pips on the upside. But if the market drops 100 pips and hit our stop, we lose 100 pips. We don't have any position to earn 300 pips. We have to re-enter into the market, but after losing 100 pips, we will not just like that enter into the market. So invariably we will miss the opportunity of booking profit. It might be 300 pips on the upside, but we may not have the position. But if we use the hedging, then let them drop 100 pips and hedge you. If the hedging is not making profit for more than 30 minutes, then you just close the hedging and keep another hedging order below 10 to 15 pips or 30 pips below the market. And when they start rising, you just raise the hedging order also simultaneously. And then once you find the position is making profit, keep stop at entry, that 300 pips is yours. So a simple change in the mindset. Instead of stop, if we use the hedging, then you have got a chance to hold the position. You have got the time to review the market, whether the hedging is making profit or hedging was filled during stop end. Then you will be able to correct your trade by closing the hedging and with a nominal 5-10 pips loss or a profit. And when they start moving upward, you will be able to really see the profit on the other side. So our entry will be, from the start of the session, we will watch for 30 minutes. And if they are not made a stop end, and if they are closer to that of the initial high or the new high, then we try to take a sell position. If they are closer to low, we take a buy position. And today what happened? They had done the intentional move. Breach the low and stay below that low for more than 30 minutes. And from that breach, it was about more than 7 hours. So obviously we know very well they are making the intentional move on the downside slowly. So third session only we will try to take the position. So we will not do a risky trade of sell after the drop. Sell after the drop, if we do it, and they may give about 5-10 pips profit, but if they suddenly reverse the market, the risk reward will be just opposite, 10:100. For the profit of 10 pips, you might lose 100 pips. So don't make it that way after the drop, because it shows visibly that the market has dropped. There is no point in hitting the dead snake. Already they had dropped, and there is no question of fear creation here. Why they drop it? They drop the market in order to create the fear. or trigger the emotions of the long holders, then they go in for distress selling after the drop. But after about 1 hour, nobody will come and sell. And they will come and sell only towards the close of the session, European session, when they want to just close their trade for the day. Then probably they may just make a drop again. Then the traders, having waited for a long time, seen that there is no rise at all, then they liquidate the long positions, and later on, tomorrow onwards, they make a very big rise in the market. So they know how to induce the traders to liquidate the long positions. So that we need to understand. It is a simple patient testing game. See, they have got the capability of rising up to 1.34 and 1.62. Then is it difficult for them to rise from here or drop from here? It is not at all. But ultimately, they are holding here in order to test the patience of the traders. And they rise from 80 to 88 in the case of USD yen. And why they are holding around 88? This is inducing the traders to short. On a pullback, then the traders will think that it is better to short on a pullback. Technically, it is expected to come down further. Then they take it upward. Then they breach their technicals and say that it is due to fundamental. The Japanese economy is very weak, so it has gone up. One time they will say Japanese economy is very weak, then they strengthen yen by dropping USD yen. Another time they will say Japanese economy is very weak, then they just make USD gaining and USD yen will be making upward move. So ultimately you won't be knowing when exactly they are going to make what sort of move and what sort of interpretation for any data coming out. And you know very well that as far as US dollar is concerned, they have the USD weakening move, USD gaining move, and also the risk appetite move and the risk aversion moves. So they can give any sort of attribute depending upon the type of data release and then continue to trap the traders. So if you just focus on how they try to trap the traders during such trap time, when they are making a drop and stop cutting the new low for more than 30 minutes buy, then you will see a real profit in the positions, irrespective of the fear what they are creating. Then exit. Opposite to this, after dropping and buying, they quickly gain the level and hold high and just form the new high, and inducing the short sellers to do the short covering. And when the traders turn long on the higher level after the rise as a breakout trade on the upside, then they know, okay, traders have turned long, there's no point in rising. If they rise, then the traders will book profit. They hold, and start making the slide. Then the breakout traders will cut the positions. So ultimately what they are trying to do, induce the traders to commit positions and try to trap. They are effectively doing their job. But we relate all the currency moves to that of the economic conditions and the technical conditions of various currencies and compare all the countries and do in-depth study as if we are going to run the government. And finally see that we lose our equity. So find out which is the right way or which is the right method of understanding the market. So in the event, if we are using the hedging, if the position is hedged, then you watch whether the hedged position is making profit or loss for 30 minutes. So if the hedging is making loss for 30 minutes, understand the hedging was filled during a downward stop end. Not that the market is bearish. During a downward stop end, it got filled and the hedge position is making loss. It is something like somebody has taken a sell position during the drop and see that the position is not making profit for 30 minutes. So this is very important for us. So once we understand that they are done only a downward stop end and the position got filled, and then subsequently the market has gone up and the position is hedging is making loss, what you try to do is cut the hedged position with a nominal loss of 1 or 2 pips or 5 pips, and then keep another hedging order below that to limit the risk to 20-30 pips. And once they start rising the market, you move the hedging order upward, hedging order, not order, and not the position. Then you will be able to see that you have come back to the same level, the stop level, wherein you initially kept the hedging order. Then finally you will see that you are able to keep stop at entry, and their intention is revealed, they continue to make the rise in the market. So if you are afraid and become bearish by looking into that of the red candle formation, can be easily made fools by pretending as if the market follows technicals, and then suddenly reverse and say that it is due to fundamentals, or it is due to breaking news and things like that. So if the position is making, if the hedging is making profit for more than 30 minutes, it is simple. You are locked 30 pips loss with a higher level buy and the lower level sell, and the selling is making profit. Keep stop at entry. Let them drop even 200 pips. Doesn't matter. And if you find that the market is quite away from that of your original position, you can always close the original buy with the hedging, losing 30 pips. If you use the stop, you will be losing 30 pips. But you can watch and close it later on also. There again, hedging is used instead of stop, wherein you have got time to review your trade, and then you are in a position to decide with regard to the closing of the position. Otherwise, you can simply close. If they make a big drop from there, close the buy position and use the hedging, and still you, if the market moves downward another 30 pips, you will be at break even. Suppose on the buy side you lose 100 pips, on the sell side you will be having 70 pips profit. And if the market drops another 30 pips, you will be at break even. And if they drop further downward, you are in net profit. So hedging is really beneficial. But simply people say that if you use hedging, you do not know how to trade, because they want to tell it 100 times so that you start believing it. Now coming to that of the European session trade. Now it is about 9:39 GMT. So euro has come to that of 1.327881. As I explained, that it has to go above that of 1.3279 and stay there for 30 minutes in order to take a buy. But they are here, we can do a sell and buy trade for about 10 pips. That is of no use. I don't recommend scalping. So instead you have to go in for a big profit booking trade. So the best thing is wait for the US session start. When they are doing the intentional move, holding it, and we will also watch without taking position and laugh at them. Okay, you hold it throughout the European session. We are not worried. We identified your intentions that you want to hold low and just induce the traders to liquidate the long position out of distress, and later on you wanted to rise the market. Fine. Before the rise, I'll buy, so that once you rise, I'll book profit. So make an understanding of this nature, then you'll find that trading becomes a pleasure. So ultimately, if you want to become a successful businessman, you need to know what your customers' requirements are if you are selling some product. And also, suppose if you are going for a B2B business transaction, you need to read the other man's mind. Find out what is his requirement and what is the price he is willing to give, whether there is a real demand or whether he is creating an artificial demand or artificial supply and things like that. Read all the information pertinent to him so that you will be able to position yourself properly and give the business or take the business. Otherwise, if you believe simply whatever he is telling is true, then you could be easily misguided or cheated by the other person. If you want to be a smart businessman, you need to read the other man's mind. Similarly, if you want to be a smart trader, you need to read the mind of the players. then you will find trading is a child's play. Let me answer. So I'm not taking any positions in the major. I do not want to recommend any positions in the case of crosses, because cross trading leads much more understanding in the market. I have not explained it without explaining it. I do not want to give it, because that is of no use, and you will not be able to understand what are the conditions which are to be fulfilled in order to take the positions in the case of crosses, so that you will have 100% profit on that. Okay, let me answer the questions which are asked here. Oh, sorry. Okay. I request everybody to put the questions in the chat window, because I'm not able to open the question answer window here. I used to see it here. Okay, fine. I got it. Because sometimes I see some questions left out after completing the webinar. Okay, Mohan Kumar. Now in euro, breach the low and form new low, but new low is not breached. Yes, new low is not breached during 30 minutes of our observation. Now we can take a buy, and yes, we can take a buy, but I just explained the condition. No, we can take a buy near that of the low and book profit near that of the initial low, 1.3278. So hardly we can get about 10 to 15 pips. If you are interested, you can do that. Otherwise, simply wait for the US session to start. Then they will make one downward move and maybe breach the low by another 10 or 5 pips. Then start making the rise. If you buy during the stoppment and keep 30 pips hedging order, your hedging order will not be filled, and you will be able to book easily profit during the upward journey. So if you aim for 10-15 pips in the market and identify such trades, you invariably miss big profit booking trades. If you wait for the big profit booking trades, then you will simply ignore small scalping. It is something like the wading crane. It will always look for a right size fish to capture. It will not be interested in small fishes. So we need to develop patience to become like that. Then Gregor. Why do you see AUD this year? Below 1? No. AUD is not going to come below parity so soon, and it will be in the range of 1.03 to 1.0550 or 6. And that range it will be trading when Euro and GBP are gaining levels. See, gaining the levels in the case of Euro and GBP will be there till first and second week of February. Then afterwards there will be some more sideways move, and later on from the month of April, May, you will come across considerable gains. So you will be able to see at that time AUD not really participating and holding. Whereas USD CAD will come above parity and start trading, and USD CHF is also expected to come closer to parity and trade, and USD Yen is expected to come to about 95 to 100 and trade. Euro and GBP to trade around 1.4546 and GBP around 1.70. That sort of trade position levels you will be able to see after April, May, June this year. But Australian dollar may not participate in such rally. So you might be trading on the strength of Australian dollar when compared to the rest of the currency. You don't mind taking buy position in Australian dollar when compared to Euro and GBP. But after a month or so, you will find your perception is changed, and any rise you will feel like selling Australian dollar. And that is how they change the perception. You know, in the stock market, you know, every year they will not rise the same stocks. They will pick up some bunch of stocks and try to rise this year. Then afterwards that market will undergo the corrections. The next year you will find another 5 stocks will be used for rising the index. Index stocks might be used to rise the index. The index might be rising, but if you are still holding the long positions or delivery based positions in some of the stocks which have performed last year, you will find their underperformance. So the players know very well how to make money. So Australian dollar you have been betting quite a long time, but if you still continue to bet on Australian dollar, they may not be able to give profit. Understand their hidden agenda. Is there any more questions? Okay. There are no more questions here. Okay. Gold and silver. Now, as far as gold and silver are concerned, this year the rally will happen after some time. Not immediately. After February, the rally will happen. So you have to wait for the lower level consolidation in the case of gold and silver. Then afterwards, gold is expected to go up to 1850 and silver to go to about 38 to 39 range. That's what I can tell you. Okay then. Fine. So I'm not committing any position here at the moment. As I explained, that they are doing the intentional move and they are going to do only a range bound swings for about 15 pips from 62 to 79, 62 to 79, that sort of thing, and afterwards make the slide. So you have to keep it in mind. So kindly wait for such breakout and going above that of the initial low. In the case of Euro, 1.3279, and in the case of GBP, it is 1.60. I got it here. 1.6060. Then afterwards, you can try to take a buy so that the quick rise will happen. Otherwise, if they stop cutting the new low and during start of the US session, you can try to take a buy and definitely you will be able to see the profit on that. So I am not taking any position here for the simple reason that I will be simply holding it. So instead, during the US session, I will try to explain to you what happened to the market condition without taking positions, how they set the initial low and the new low, and how they are making the moves. If you read their moves carefully, you will be able to earn easily from the market. So reading their move, we need to focus on the live market quote page. If you try to use various other studies, then you may not be able to understand, because this sort of contrarian moves you will not be able to see using 4 different charts. So the net changes are very important for us to understand whether they are handling the majors or the crosses. So when they are handling the crosses, if you try to take position in majors, then you will not see even 2-3 pips profit or loss. No, market will be simply holding and it will be testing your patience. Instead, you wait without taking position so that your patience is not tested. When they quickly come closer to new low and things like that, take a buy. You will be able to really book profit. So I take this opportunity to thank everybody, and I'll come back by 15 GMT and read the live market quote page and take the part 2 of Tracking the Forex Market Together webinar. So this is basically an educational, I'm giving all these talks for the educational purpose, for you to get rid of the market fear and perceive the market with a right objective or with a right sense of understanding the strength and weakness of the opponents, so that you will be able to win in the race. You need not be very strong with money, but you can be smart, identifying the weakness of the big players and try to trade. Now, if you want to really fight with them, you need much more money to fight with them. That is next to impossible for small traders. But you can identify their weaknesses, their limitations, and trade along with that. You will be able to really see success in trading. So thank you one and all. See you again by 15 GMT. Please come back and I will give you some other interesting aspects pertaining to today's market conditions. Thank you.